Hello everyone, I hope you all are fine. Today the webinar topic is preparing for the new financial year, a comprehensive guide. As you know that the financial year switching date has been arrived shortly, within 2-3 days, that is April 1st. That day you have to change the financial year to start the bill number from 1 onwards. For that you have to do certain adjustment entries as well as certain precautions before doing that procedures. Today in this session we will learn that how to do the financial year changing from busy and how to start the bill number from 1 onwards. Please be active in this session. So in between, if you have any queries or questions, you might be write a message in a chat box so that I can answer the questions after this session in our Q&A chat box. The session objectives of today's session is introduction, year-end adjustment entries. There is some of the entries that you have to do for your side before changing the financial year, like depreciation adjustment entry, that profit transfer to the capital holders, that adjustment entry. Similarly, interest calculation voucher entry, tax adjustment entries, etc. In detail, we will learn that how to do that. And third point, the switch your company to new financial year. How to switch a company to new financial year and what is the steps to be followed, and challenges and the solutions. While switching the financial year, you might be get certain issues, some kind of errors, so that how to resolve it. So that we will discuss today. And end of the session, question and answer session, you can write in a chat box. I can answer your questions. Thank you. Then we will begin the session. The financial year changing in India refers to the process of altering the time frame for financial year reporting and accounting activities from the traditional April 1st to March 31st cycle to a potential January 1st to December 31st period. But in India, we are using April 1st to March 31st financial accounts or books. But some other countries, they are using January 1st to December 31st period. This change requires legal, regulatory, and administrative adjustments and impacts various stakeholders, including businesses, investors, government entities, and taxpayers. Factors driving this change may include alignment with global standards, simplification of accounting and tax processes, and facilitating data comparisons. It necessitates careful planning, stakeholder consultation, and adherence to legal and regulatory requirements to ensure a smooth transition. The thing is, before switching the financial year from previous to next year, the balances to be matched. If the balances is not matched, means that is the problem you might be facing in future. So that we will learn that how to manage some kind of adjustment entries as well as precautions before doing that. Similarly, there are some steps to be followed. I can explain you by one. The first thing here is precautions. Before doing any changes in your existing database, we are suggesting you to take a backup. That is very first stage. You have to do that. You have to take one set of backup and safely save it in your folder or any local drive. Because if you disturb if you run any utility or if you disturb existing data, cause many problems. So that we have suggesting you to take a backup, and then you finalize your transactions. If any transactions vouchers are still pending, any purchase vouchers are pending, any sales vouchers or any accounting vouchers like payment voucher, receipt voucher, these are pending. So please complete that all entries. Later, next step, you can have to enter some provision entries, year-end provision entries, just like depreciation voucher as well as interest calculation vouchers, similarly tax adjustment entries, etc. That you need to do that. And after that, take a backup of the company and transfer the balances. Then you verify the reports. Transferring the balances, it's nothing but when you're changing the financial year, it will ask you to transfer the balances. Then you can transfer it. If you don't want to transfer the balances in some scenario, then you can skip that. In busy, we have transfer the balances option as well as without transfer the balances both. As per your need, you can transfer the balances while you switching the financial year. Once you did that, you can verify your reports, whether the trial balance report is matching or not, or P&L and balance sheet is matching or not. That you can verify by yourself. Even you can verify your party ledger also. So these are the very important precautions that you need to follow. In our next slide, let us discuss that year-end entries. That year-end entries you need to do on the date of March 31st. Some of the important year-end entries are charged depreciation on fixed assets. The fixed assets, it means it might be building, might be machineries, furnitures, fixtures, or some kind of vehicles, etc. These are called as fixed assets. It has certain usage of life cycle. After the usage, the life cycle of these products will be reduced. So that we need to enter one depreciation journal vouchers to match the final results. So this will be important entry for our accounting side. And the second thing here is interest paid on loan account. Suppose we are taking a loan from a bank, so that will be interest will be paid by us. So that kind of scenario, we need to post one journal voucher related to the interest. So that is also one part of our year-end entries. Before closing our financial year, we need to post this voucher. In busy software, we have a automatic posting provision, journal voucher to be posted automatically. Just you press the F4 button that I can show you later. And profit and loss transferred to the partner's capital account. If we started any business or any firm, there is, if any, only one single user will be there, then we call it as proprietorship. Similarly, if any company started with some capital fund along with some multiple shareholders, or you can say it as multiple capital holder, there is multiple capital accounts will be there. So in that case, we need to transfer the profit amount to them end of this financial year. So this entry is very important entry. So based on the transactions, you will be get some profit that to be transferred to the existing capital holders account. That entry to be posted before switching the financial year. And even GST adjustment and payment entry is also very important, because there are some input output adjustment will be there, cross adjustment, regular payment, tax adjustment. This type of adjustment entries we need to enter. Then only the tax adjustments and tax value will be properly reflected into the next year. And there are some stock adjustment entries also you need to do, because maybe in our godown, the physical stock will be some shortage will be there. Book stock, the system stock, it is showing that, for example, 10 pieces, but in our physical godown, we are having only 8 quantity or 8 pieces. So this type of mismatch will be happened sometime. So that is why we need to post one physical stock entry to match this type of mismatches. After that only we need to do the year-end entries. So the main thing here is you can just note it down, the points whatever I'm saying. So these are the entries you need to do. In our next slide, we will see that charged depreciation on fixed assets. The fixed assets, that account created by our account side. For example, furnitures and fixtures like this. These are the fixed assets account. And the depreciation rate of interest you can define here, annual rate of depreciation and half yearly rate of depreciation. In busy software, we have Company Act depreciation as well as Income Tax Act depreciation calculation. We will see the report of depreciation account. For that, we will come to the display. Under that depreciation chart, the depreciation report is available. Just explore the report. Here you can select the depreciation account ledger, and you just open it. In that, you'll be getting depreciation accounts, that is fixed assets accounts, capital equipments, computers, furnitures and fixtures, office equipments, plant and machineries. These all are the fixed assets accounts. And the rate of interest it was charging for the capital equipment is 10%, and the opening value of this asset is 1 lakh rupees. First half, the 5,000 will be charged, and the final value becomes 1,05,000, and depreciation will be charged 10,500 WDV. After the depreciation charge, the final value becomes 94,500. This is the actual calculation of depreciation. But when you press the F4 button in busy, so automatically the journal voucher to be posted, so that you can use the F4 shortcut key. Then this kind of window can be appear. Here you need to select the journal voucher series and mention the voucher date. So the date will be picked automatically, 31st of March 2024. Here we can mention the depreciation account ledger. This depreciation account ledger comes under the group of expense indirect group. Narration automatically written down. If you want to change it, you can change here. Then you just save it. Now totally 5 journal vouchers has been posted regarding this depreciation. You can check the depreciation journal voucher under the transaction journal list. So these are the depreciation journal vouchers posted by the busy software just in a single click. If you want, you can open it and you can view the entry. So this is the depreciation voucher. Credit side, the capital equipments ledger will come, and debit side, depreciation account will come. If you want to post this depreciation voucher by manually, so that you can add like this: journal, add, specify the date, and debit side you can mention the depreciation account, and credit side you can mention the furniture account or whatever it is, fixed assets account. This is how the manual journal voucher to be post by yourself. Otherwise, you can use the automatic journal voucher posting option by F4 shortcut key. So after posting this depreciation related voucher entries, JV journal vouchers, that could be reflected in our balance sheet side. Just open the balance sheet report. Here you can see that depreciation. The final value of the capital equipments, it was showing that 94,500. This is our WDV value, written down value. Computer, it was showing that 1,19,600. So after the depreciation journal voucher posting, the value is reflected here. Even you can see the reflection in profit and loss also. Open the profit and loss report, then you can see the depreciation account that charged by us, 37,545 rupees. So this is very important entry that you can do it before changing the financial year. Now let us discuss about interest paid on loan. The interest, it was taken by the bank. First of all, I would like to open one ledger here, IDHL business loan. This is one of the bank account I was created under the group of loans, that is called liability. Loan is our liability. I open the ledger, and here I was taken a loan of 10 lakh rupees for this bank, 10 lakh rupees for this bank. And now let us see the report. In a display menu, we have a interest calculation report. That let us take on a bank interest report, and here you can select the bank ledger. One account, let me select IDHL business loan. Specify the date range, and flat rate you can select it as 13%, 14%, like that. And the interest, it was showing that 97,945 rupees for the 275 days interest. It was actual loan, it was taken 10 lakh rupees. The interest, it is charging 97,945. Now before switching the financial year, you need to post one journal voucher. So that you can press F4 button over here. In this screen, you have a F4 shortcut button. Just press that. And then you can get this type of screen. Here you can select the journal voucher series, specify the voucher date. Generally, the voucher date should be 31st of March 2024. And interest payable account. You can create two accounts for interest calculation. One is for interest paid on loan, another is for interest received on loan. And this interest paid on loan, this particular account comes under the group of expenses indirect. Similarly, interest received, this account to be created under the group of income indirect. Likewise, you can create two separate accounts for interest payable as well as receivable purpose. If you need to create any bill references against this entry, you can enable this option. Later you can come to the narration entry field, but in busy, the narration is automatically filled out here. No need to type it again. If you need to change any words or change any informations, you can type it over there. This is for payable voucher narration, and this is for receivable voucher narration. Once you complete these entries, you can just press OK. Then one journal voucher has been posted regarding this interest calculation, that you can see by modified mode or under the transaction menu, journal voucher. You can open that entry. This type of entry will be posted by the software. IDHL business loan, this account comes under the credit side, and the interest, it was charged 97,945, and then the interest paid loan account, this account comes under debit side. The value, it comes here 97,945. This is how the interest voucher will be posted from the software. If you want to post it by manually, then you can post it by manually. Just comes here journal voucher, and here you can post it by manually. Once you post this kind of voucher, then it will be reflected in our final result side. Just go to the final result. You can see that loans and liability. IDHL business loan, 10,97,945. Previously, this balance sheet, it was showing 10 lakh rupees over here, but now the value has been increased there, and it was showing that 10,97,945. The interest value is also added here. Now let us see this information in profit and loss also. Let me open profit and loss account. Here you can see the interest paid on loan value is 97,000. 945 rupees. So this entry to be made before switching the financial year. So then only the final results become matched. And the next, stock adjustment entries. Suppose, for example, in our godown, the physical stock will be 10 piece, but in our book stock, that is called system stock, it was showing 8 quantity. There is some difference. That kind of scenario, we have to post one stock adjustment entries using the physical stock method. It might be more quantity or it might be less quantity. Sometimes the physical stock quantity is more, sometimes the book stock quantity is more. Any case, we have to post on stock adjustment entries, then only it will be matched. Once it's matched, then you can switch the financial year. Later the opening balance also match in our next financial year. Let us see how it is work. For example, in our stock status report, once we check the stock of the product, this is our stock status report. The Fanta 2 liter, it was 6 bottle we have in our system stock, our book stock. You can say it as a book stock. But in our godown, it might be 5 quantity or it might be more also. So that kind of scenario, you need to post a physical stock voucher from here. Physical stock, add it. The physical stock entry, you have to do it for a while. So this is the physical stock entry voucher. Specify the date, 31st of March. Then select the material center. Stock journal voucher series, you can select main. Create stock journal voucher, you can tick this checkbox. Then here you can press the arrow button, load the items, select all product or select by group, and then you load the items. Here all the items can get loaded. Now the actual quantity in our book stock will be shown here in a fourth column, book stock quantity. And in our godown, we have only 4 quantity or 5 quantity that you can count and you can insert here. In our book stock quantity, it was 6 quantity, but in our physical godown stock, it was 5. Similarly, Limca 2 liter, the actual book stock quantity is 29, but we have 32. Mountain Dew 2 liter, the actual book stock was 10 quantity, and here we will have only 9 quantity. And the Thumbs Up 2 liter, it was 42 quantity. This was matching. Then you need to enter 42 only here. Both with matching means you have to enter that 42 quantity. Other next item is Vibe Energy Drink 250 ml. This is only 5 quantity we have in godown. So in this way, you can post the physical voucher entry, then just save it. After saving the physical stock voucher, automatically one journal voucher, stock journal voucher. Journal is different, stock journal is different. Stock journal is a pure inventory voucher, and that stock journal voucher is posted automatically. Let us open the stock journal voucher, and it will be posted like this. There is a 2 portion here. One is item generated, and this one is item consumed. If any quantity is less than physical quantity, then item generated value will affect. Here the item generated, it will show you the plus quantity, and item consumed means if physical stock quantity is more than system quantity, then it will be shown in a consumed place. This is how the stock journal voucher will be posted. Once the stock journal has been posted, our closing stock report can be get matched. So let us open the closing stock report once again. Now you can see that Fanta 2 liter is 5 quantity, Limca is 32, Mountain Dew is 9, Thumbs Up is 52, Vibe Energy is 15 pieces, 15 bottles. This is how the stock matching can be done after entering the physical stock entry. This is very important entry. Most of the users of Busy, he can't manage the stock and everything. Just he can post purchase voucher or sale voucher. End of the day, here he can set that the stock is not matching. How to do that? So that this physical voucher entry, it is really help you to match the stock quantity. Okay. So if you match the previous, if you match this entry or if you match the stock in previous year, then next year onwards, easily you can manage your stocks and everything. Once you post this stock status report, physical stock entry, that value could be reflected in our final results side also. Godown, book stock, that value could be reflected here. Stock in hand will be this much, and in the profit and loss account also the stock value can be reflected like this. The next entry is GST adjustments and payment entries. The GST entries, you can check it from here. GST reports, GST summary. In this GST summary report, specify the date range. If you are filing your GST return and all those things quarterly manner, then you can mention here quarterly, or you can mention it by monthly also. Now I am taking the date 1st April to 31st of March, and I can open the report. This is called GST summary report. This report gives you the complete clarification about the tax calculations, that is taxable value, IGST, CGST value, SGST value, input GST, output GST, adjustments, everything you can get to know that. Here you have an option called F4 shortcut button. If you press the F4 shortcut button, then you'll be getting this type of stock voucher posting options that automatically Busy can generate the related adjustment entries. For example, before switching the financial year, if you have any RCM value and that to be adjust with our regular tax adjustment, then we need to post one journal voucher. But here you have to press F4 button and you can just select the option, then this screen will appear. Now we don't have any RCM value over there. That is the reason it is coming black. If you have means you can post the JV directly. Input output adjustment. Suppose the input value you need to adjust with output so that you can use this option. So the IGST output will be adjusted to IGST input. Similarly, CGST output value will adjusted with CGST input, and SGST output is adjusted with SGST input. If you need to specify any narration, you can mention here. Then you can just post this voucher. The voucher will be posted like this. Here you can see the details. IGST value, CGST value, SGST value all are matching. Just to press the F2 button to save it. When you're saving the voucher, this type of adjustment entry window will appear. Here you need to select the GST adjustment type as input output adjustment, same tax, just to save it. This is how the adjustment entry will be posted by the software. Even you have the option to post the cross adjustment also. Suppose IGST liability we need to match with CGST SGST, or CGST SGST liability we have to match with IGST liability, means you have the cross adjustment method. Just select the cross adjustment and here you can mention the journal voucher series and date, you can post it. Currently I don't have any payable value, means I don't have any liability, so that's the reason it is not showing. And the last entry is regular GST payment entry. You just select the regular GST payment entry, and when you make the payment to the government, so that you need to post this voucher entry. Here you can select the voucher type, payment or journal, voucher series, specify the date. The IGST account to be debited is IGST output, CGST debited is CGST output, and similarly SGST account to be debited is SGST output. Here you can mention the accounts to be credited. The credited account will be State Bank of India, because I am making the payment to the government. So then in which bank I was making the payment, so that bank to be taken here. So suppose if you want to make the payment in next month, so then you can create one ledger here, GST payable account. By pressing F3 here you can create one new ledger, GST payable account under the group of liability. So then you can tag it over here. But now here I am making the payment for this month itself, so that I can taking as State Bank of India. Once you've taken that ledger, then you can payment voucher will become like this. So here debit side the IGST output, CGST output, SGST output will come, and credit side State Bank of India ledger will come. When you're saving the voucher, you can mention the regular payment or RCM payment, and the date of period will be 31st of March. CGST, SGST value will come automatically. Mention the challan number over here, challan date. If you have any DD number, mention here. Bank name you can define SBI Bank, and also bank code. Once you complete the entry, just save it. The entry has been posted. This is how you have to do the stock GST adjustment entries in Breezy. For that you can use the F4 shortcut key. Other than you have a manual entry also, but manual entry it will take more time. Sometimes there is a human mistakes also. So this is how the journal voucher to be posted for the GST adjustments. In our next slide, let us discuss about profit and loss transfer to the partner's capital account. First of all, the profit you can analyze by using the final result report. Final result report, profit and loss report. The profit value will be shown here. You can see the net profit. The net profit will be 74,13,825 rupees will be the profit account. This profit to be transferred to the owner or proprietor. Then what we need to do, we need to post on journal voucher, right? The journal entry you can post like this. Come to the journal voucher here. Debit side you can select proprietor account or profit and loss account. Value of the profit is 74,13,825 rupees. This is the profit of the business. If the company having single owner, then capital account, single account to be comes under the credit side. If the company will have multiple owners, multiple partners, then we need to create separate account for the proprietors, each and every partners, not a proprietor, partners. This is capital account. It comes under the group of capital account, and this is profit and loss account. It comes under the group of profit and loss account. Similarly, for the multiple proprietors, then you need to create new account by pressing F3, something like Ravi capital account. In this way, you have to create the partners account. It comes under the group of capital account, and you can save it. But now I am showing you in a single proprietor case. If the company having only one single proprietor, then the debit side profit and loss will come, credit side the capital account will come. In this way, you can post the journal voucher. So once you post the journal voucher, it will be reflected in our final result report. I can show you the final result report. In this report, the capital account and final result balance sheet I can show you. The capital account previously 10 is now 10 crore will be there. Now the 10 crore 74 lakhs 13,825 rupees it was showing, because the profit also added here. This is how the reflection will takes place in our final results side. So this is the entry for the profit and loss transferred to the partner's capital account. To the journal, you can do that. And now let us discuss how to switch your company to the new financial year. The switching of financial year is very simple. So already we discussed that before doing this, you need to take a fresh set of backup and keep it somewhere else or some folder or drive anywhere. And then you can start the process. New year from 1/4/24. Here I can close the company once and I can reopen it. Go to administration, change financial year, new year from 1/4/24. Here you can get this kind of message. You are going to create a new year starting from 1/4/24. Okay. Start the process. Here you have to check this specific checkbox. Here it is saying that create new year only, don't carry balances. Suppose if you don't want to carry the balances or the next period of the financial year, then you can enable this option. You can tick this checkbox and you can start the process. If you want to carry, then you need not to do anything here. You just click the start button. The process will be started. It is take time to complete the process because based on your data. Suppose if the data size is more, entry is more, so might be get much time. Otherwise, it will be get complete soon. All the masters, all the balances are carried out. The numbers of masters that we have in a busy, it was showing that 437. Once it's done, you'll be get this type of message. Financial year changed successfully. Just press OK. Once you did that, the software automatically open the 24/25 financial year. That you can get it from here. You can see the window. See here the financial year. It was showing that 24/25. So this is the process you have to follow for changing the financial year. Very simple steps, but you need to follow the certain adjustment entries. Then only the values become match. Once you complete the process, you have to verify all the balances of your previous year data as well as current year data. You can just open the two windows here. Now I am opening one more window. Likewise, you can open two busy software windows. One is for 23/24 financial year, another is for 24/25 financial year. Then you can take the ledger statements as well as the financial reports as well as trial balances, etc. To switch the financial year from previous to next, you can use the F11 shortcut key. So then automatically the financial year will be changed. Now you can see that this is 23/24 financial year. And another company I was opening that is called 24/25 financial year. Likewise, you can open two tabs. Then you can verify the reports: stock status report, ledger report, trial balance report, everything. This is how you can manage your balances verification. And in our next slide, let us discuss some of the challenges and solutions that you might be faced while you switching the financial year. The first problem is creating a financial year without carry balances. The thing is, when you switching the financial year or when you creating a new financial year, that time you don't want to carry the balances to the next year. So then what we need to do? What steps we need to follow? For that, you need to do that when you're changing the financial year, there is one option. I already shown you earlier, so I can show you once again. Don't carry balances. You just enable the option don't carry balances. Then you can switch the financial year. So then what happened? The balances will not carry forward. Only the item masters, account masters, that will be carried forward, and bill number will be started from 1 onwards. balances cannot be carried forward. This is how you need to follow the steps. You just enable the checkbox, create new year only, don't carry balances. As you seen on my screen, here the screenshot will be attached. You just follow the steps. Create financial year, but don't carry balances. This is the point here. And in our next slide, let us discuss some other challenges. Resolving 91 RT means runtime error. 91 object variable not set while changing financial year. The solution for this error becomes you can copy the data directory and keep it somewhere else. For example, in my software, I have confirmed the data directory was the webinar sample data and change financial. This is my data directory. So it's just you just go to the data directory first. Just go to the data directory, and here you can open the folder of the data. So this is your data. Just Control X. You can press the Control X. Then you come back and paste it somewhere, some other folder or some other drive. You can paste like this, and you can copy the path of the data. This is the path of the data. You just copy that folder path and paste it here. The thing is, you have to change the data directory path. You have to change the data directory path. Then you need to follow the change financial year process, because sometimes the folder it doesn't have the valid permission to change the financial year, or read and write permission they don't have. Sometimes the folder it might be not have. That is the reason you might be get this problem. The solution number 2, that is we are suggesting that you can go to previous financial year, or you can say it as a 23-24 financial year. You can switch and run the rewrite account books. Just you open the 23-24 financial year. Here I can open. I think the folder I was pasted here so that it is not coming. So I come back to my previous path itself here. Change financial year. The next thing here is you have the option called rewrite account books in a housekeeping menu. Switch to 23-24 financial year and run the rewrite account books. Once it's completed, then you can try to switch the financial year from 23 to 24-25. This becomes our next solution. Very simple solutions, okay? But before doing this, we are suggesting you to take a backup. Then only go further. In our next slide, let us see some other points. Carry forward below configurations to the next financial year. The configurations are party item price structure, item quantity discount price structure, item parameter wise pricing, and BCN wise pricing in previous financial year. These are the pricing related configuration that we are using in our previous year. So this configuration it can't come automatically after switching a new financial year. Then what we need to do? We need to carry forward it by manually. First of all, you need to enable this configuration, and this configuration will comes under the inventory menu. Under the inventory menu, item pricing mode in voucher. So here I was enabled the item pricing mode was party item wise price or discount structure, and select mode was mixed mode. So next, when I enable that option, then I can get a configuration button here, party item price structure button. Here you have to configure the related price configuration. For example, let me take one specific party group called Sunday Debitors Local. Here you can see that the Fanta, the item group, it was having a discount of 3% for this particular account group. General item group, it is having 5%. Limca item group, it is having 8%. These are the discount slabs I was created for the particular party group. This is called as price structure creation. But this was done by our previous year only. Now, after switching our financial year to new year, that might be not come. So for that, what we need to do? We need to transfer it by manually. To transfer it by manually, you can come to the administration menu, change financial year menu. Here you will be getting option called carry item pricing information to financial year 14-24. Just select that option and you can use this party item price structure option. You can select this option. Next, you will be getting this type of screen. In that, it is saying that create master if they do not exist in next financial year. If you want, you can enable it. Then you can start the process. So now the party item price structures are successfully synchronized. Would you like to see the log file? If you want to see it, you can press yes. Otherwise, you can skip it. Now the price structure will be forwarded to the next year also. Now everything will be perfect. This is how the price structure to be carried for the next year. Similarly, not only for the price structure, even you can do it for your item quantity discount price structure case also. Even if you are using the item parameter wise pricing, then also you have to do these settings. BCN wise pricing case, you have to do these settings. To transfer the BCN wise pricing, you can use this option. In our next slide, let us discuss about carry forward the post-dated check PDC entries in the next financial year. To carry forward the PDC vouchers to the next financial year, you need to use the regularized PDC option. We will see the scenario first. First of all, this PDC voucher enable, you have to do it for your account tab. Account menu, you will have a PDC, post-dated checks in payment and receipt voucher. That was already enabled in my system. So then I can post one payment voucher entry. The payment voucher entry I was posting here 31st of March, and it was PDC date. And the PDC date it might be 5th of April, that is called next year, 5th of April. PDC date it was 5/4/2024. Then you can take a party account, specify the value. Existing references are not allowed. PDC date 5th of April. The account it was payment I was made through the State Bank of India. This is how the PDC voucher to be posted. I was change the date here once again. The voucher. The payment voucher has been posted. After that, you can switch the financial year. Then you can go to the next financial year. Here you'll be getting an option called regularized PDC under the menu of utilities, miscellaneous data entry, not utilities. You'll be getting option called regularized PDC. In this regularized PDC, PDC voucher to be reflected. As you seen on my screen, the PDC voucher will be reflected like this. If you want, you can select it by one, or else you have a select all option and you regularize it. Once the regularization has been done, that voucher to be cleared, that voucher to be regularized, and it will be reflected in our next year data. So let me show you here in the payment voucher list. Just open the payment voucher list. You can see the entries. Just now I was made one payment voucher to the Agarwal General Store on the date of 31st of March, but the PDC date it was 5th of April 2024. After the regularization, the date it was considered as 5th of April 2024. Previously it was our PDC date, but when I regularize it, it should be treated as our voucher date. This is how the PDC and the regularization process will be done by the software. This entry will be put like this. If you want to manage your PDC check entries in the next financial year, you have to follow this regularization process. In our next slide, let us discuss about carry forward updated master information to the next year. Suppose any of the master's item or account master, you might be changed some information. Then how to carry forward that kind of information? To do that, you can switch to previous financial year. In that, you can take a party account or any item master account where you can make certain changes. For example, here I can open any of the party, and here I can add the mobile number or any GST number of the party and change the mobile number 674. I can make it as 674 and I just save it. This type of changes that might be done by yourself in our previous year, so that could not be reflected in the next year automatically. So that's why you have to follow these steps. Switch the financial year. When you're switching the financial year, it is asked you to carry forward the balances. You are going to change the financial year 21/4/24. Do you want to carry forward this balance? Yes. Then it is asked you to balances to be carried for all masters or new change master. So you can select new and change master. So then what happened? The party information that might be changed by yourself, it should be comes and carry forward to the next year. So here another option here is you have another two options called carry accounts full details like address, registration details, etc. to next year, and carry item full details, description, price, HSN codes, etc. to next year. If you make any changes related to the address and any registration details related, so you have to enable this checkbox and you can start the process. So this is how you can change the financial year and you can carry forward the correction that was made by the party master or item master from your side. The next point here is carry forward uncleared bank entries, bank reconciliation method. If any uncleared bank entries will be there in our previous year, then how to carry forward that entries to the next year? That is the point here. So that you need to use this the previous year first. There you can use the financial year option. In that, we're getting one option called carry bank reconciliation entries to financial year 1/4/24. Just to run the utility. So this type of screen will appear. So then you can start the process. Now the bank reconciliations pending, or you can say it as uncleared entries to be carried forward to the next year. Once you complete this process, then you come back to the 24/25 financial year. Here you can view the report, bank reconciliation report. You can see the uncleared entries, the specific bank account. These are the uncleared entry, and the type it should be shown as opening balance. These are the uncleared entries. It is visible in our next year. This is how you have to follow the bank reconciliation uncleared entries to carry forward. The next point here is party balance not carried forward to the current year. What is the resolution? Suppose the party balance it is not carry forward. What we need to do? We need to switch to the previous year. Then there you can run the updated master balances. This utility provided under the housekeeping menu. In a 23-24 financial year, we will have a housekeeping menu. In this housekeeping menu, you can run these updated master balances once. Later, you can carry forward the balances once again. After completion of this, you just carry forward the balances like this once again. And only the party balances will be get matched from previous as well as next year. This is the point. In our next slide, let us discuss how to stock account not showing value in current year. What we need to do. Suppose the stock account it is not showing in a value in the current year, then you have to enable one specific checkbox. Just I can open the balance sheet here. This will be balance sheet. In this balance sheet, if you are disable this option called update balance sheet stock, then we can't get the balance sheet stock value in our balance sheet. So just enable that update balance sheet stock, then you can generate the report. Then only the stock in hand will be reflected here. This is how you have to generate the report. Now the stock values get reflected, right? So this is the steps you need to follow. If stock account is not matching or not showing the value in current year, just enable this checkbox and you can view the report. In our next slide, the defining stock value manually. How to define the stock value manually? Here you can open the balance sheet report. You just press the second. You can enable this updated balance sheet stock. Keep the cursor for in our profit for the period, and you can press the enter button. Then the profit and loss account statement will open. Here you have the option. In credit side, you will have a stock account, right? You just press the enter button over there. Then you'll be getting this type of closing stock updation window. Mention the closing stock in month wise. Manual stock updation, you can do it like this. So each and every month you can define the value, how many stock account, how many balances will be there. You can define over there and you can save it. Okay? So this is the manual stock updation method. Once you fix the value or once you define the value, that will be updated in our final result side. Even you have the freezing option also. Once you freeze the value, then no one they can change it. In our next slide, we will see that importing data to the new company via XML. Suppose if you are created a new company in your PC, that company also dealing with similar kind of product, and we need to import previous company data to the new company. Then what we need to do? We need to use this XML option. To export the XML file, you just come to the data export import menu. Here you'll be getting an option called data export import XML. First you export the data. Here you'll be have a master export as well as transaction export both. Let me select master export. Here you can decide that which master you need to export, item, account, material center, etc. When you have the option to export the data along with a specific item group or all items. When you select the all master if you need all master to be carried out, you can select it all master. Specify the folder location where you want to export the file. You can select the folder location, then you export the file. This way you can export the XML file, and after that you can import this file in your new company so that all the masters will be get to import. Here I was exported one file, XML file. Next you copy that file into the another company using this import method. Select the folder location or file location and select the file, open it. Busy can show you that how many masters are there in this XML file. How many masters are there? That is how many item master, how many material center, how many account master, everything you can come to get to know that in this particular display. Once you import it, all the masters will get imported to the same new company. This is how you have to follow the steps. Going forward, let us discuss that reflecting opening stock balance in balance sheet. Sometime you might be having this issue. The opening stock balance in balance sheet, it can't show, or it's not reflecting. So how to modify it, right? To reflect the opening stock in balance sheet, you have to update the stock account. Generally, the stock account you'll be get it from here. In a stock account, you can get it from account side. This is the predefined account. It was created by default. You just specify the opening stock value here. But keep in mind, so this value cannot be changed in our current year, but it should be changed in our first financial year. That's called previous year. So now I was opened my 24-25 financial year, so that it can't able to change because this is the opening balance updation. So opening balance updation, you can able to change it in your first financial year only. This is my 23-24 financial year. I was switch my account. Then I can open the stock account. Here you can select the stock account, and then you see the opening value 51,010 rupees. This is the opening value, and this value could be reflected in our final result also. Even if you open balance sheet report also, there the same value will show opening balance value. And loss, let me open. Here you can see that the opening stock value was 51,010 rupees. If I change the opening stock value from once again, you can open the stock account. Let me change it 52,000. Let me change it 52,000. I can save it. Again, I check the final result P&L report once again. You can see that 52,000 opening stock value will show. But these changes, it cannot be possible in our next year, current year, because if multiple financial year will be there, then I can update the opening stock value stock account only in the first year, not for the alternate years. This is how the opening stock updation will be provided by the software. Next point here is trial balance mismatch between last year and current year. So to verify the trial balance mismatch from last year to new year, you have to switch the current year first, 24-25 year. That display menu, you will have a separate report for that. Opening trial mismatch from previous year, you just open that. You can press OK. You can get the details of mismatches. Now there is no any mismatch. The mismatch, let me generate on mismatch. Okay, when I can just switch to previous year 23-24. Here I can change any party opening balance just like this. Agarwal General Store. I can change the opening balance value. That the opening balance was 0. Now I was added 1,000 rupees. Next I was switched to my 24-25 financial year. Then I can open the trial balance match report. So now the mismatch was showing that Agarwal General Store, the Santa Debitor Group, local. The mismatch was current year opening is 1,036 rupees, but the previous year closing is 2,036 rupees. In this way, you can verify your trial balances mismatch or this report, and you can correct it also. So this is the topic of this today's webinar session. If you need any further assistance related to these queries or this topic, you just contact our 24/7 help desk number. Our contact number is displayed in our screen. That is 828282 5 times. And our email address will be support@busy.in. Thank you so much for joining this today's session. Thank you for your valuable time. I hope this session will be more useful for your financial year switching purpose. If you found any questions, if you have any queries, you just put a message in a chat box. Thank you so much for your participation once again.